Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances, so that you can apply those lessons to your own life. I'm your host, Ismail. One quick thing before we get started. I am starting my own email newsletter, and I would love for you to join it. It's going to be like a personal note for me to my friends of all the best things I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free. And if you don't like it, you can always opt out at any time, so there's no downside. The link to join is in the show notes, and I hope to see you on the list. In this episode, we've got quite the treat. I reached out to some of the best traders on Twitter, and I asked them all one question. What is your best advice to aspiring traders? I thought it'd be pretty cool to compile all this advice into one resource, especially since everyone and their mother now seems to be getting into trading. I wanted it to feel like you were in the room with these successful traders and got to personally ask them for advice. And wow, I was blown away by some of the people who actually took the time to contribute. This episode is packed with a gold mine of valuable tips from people who not only earn a living from trading, but some who have become legends over decades of performance. I'll link to every person's Twitter profile and any other resources that they offer in the show notes. And if you're interested in trading, make sure you subscribe, because for the next month, I'm releasing some incredible in-depth interviews with successful traders to dissect why they're able to succeed when many others can't. I've also been fortunate enough to interview some great traders already, and you can look through my past episodes for those. With that, let's dive in. First up, we have Jake, a founder of TrendSpider. And in my opinion, Jake is one of the best chartists on Twitter. I've personally learned a lot from following him and seeing how he breaks down and analyzes charts. And in my experience, I found him to be extremely generous with his time, and it seems like he genuinely wants everyone to become a better trader.
The single best piece of advice that I would give a new trader would definitely be to focus on what works for you and your personality. There's a lot of ways to trade. There's a lot of strategies to trade. And a lot of the time people get caught up in, how much money someone else is making and they're trying to make the same amount of money. And, what works for one person may not work for somebody else. Somebody could be down, 10% on their account and be able to sleep just fine at night with a lot of conviction or just maybe not a lot of risk management. Then someone else, may not be able to sleep at night if they're down 0.25% in their account. So it's really just about what works for you as an individual and what really works for your personality. So that's definitely the first thing. Second thing would be to definitely learn at least the basics on supply and demand, the supply and demand curves, what causes prices to move up, what causes prices to move down. You're not always going to have prices increasing because simply buyers stepped in. You can have prices going up because there's no supply and the price has to go up in order to find sellers. So definitely focus on what works for you and your personality, as well as learning the basics of supply and demand and just general economics can be a big help. And that is my advice.
Next up, we have Alex Mashinsky. Alex is one of the rare human beings in history to have founded and led multiple billion-dollar companies. He's currently the CEO of Celcius. For those of you who don't know, Celcius is basically a platform for you to store your cash or your crypto to earn a yield. And I think right now they're paying just over 10% on your cash, 6% on your Bitcoin, and 5% on your Ethereum. If you're interested in checking it out, I will have a link to it in the show notes. And if you sign up via my link, you'll get $50 in free Bitcoin. But I really wanted to include his advice here because he has experience trading early in his career, and as the CEO of a major crypto company where he manages, tens of billions of dollars worth of crypto, I thought he'd have some unique insight, particularly for crypto traders.
Well, and the best advice is that when you're making money, don't get confused with being in a good market with you being a super good trader. Which means that what happens is that you get so much confidence that every trade you make is great, or 9 out of 10 you win, that when the market turns, you continue to take the same bets or similar bets, and you start losing and you don't realize that the market has turned. You just think to yourself that you can continue to do what you do, and that's like you get into a bear trap, or you get into all kind of other things that really make you lose a lot of money. So unless you're a world pro at picking trends and knowing ahead of others when markets will turn, and very, very few people do that very well, you're going to end up losing money in the long run. So don't get confused between a bull market and you being a genius.
Next up, we have Zack Morris, aka the Master Furu. Zack is arguably the most popular trader on Twitter. He's made some incredible calls over the last year or two. He's got a very loyal following, almost like an army of retail traders. And he's become so influential that some companies actually reference him in their earnings calls.
If you guys are stuck in a rut, take a break. Because all you're going to do is revenge trade and get yourself in a deeper hole. Take a break, clear your mind, and focus on plays that work. Don't get desperate. Don't chase alerts. Just wait for the right setup. But take a break first. You're going to need it. All right. Love you. Bye.
Next up, we've got Jontay Porter, an NBA player for the Memphis Grizzlies and a successful trader. I was fortunate to interview Jontay in episode 5 of this podcast, so you can check that out if you want to hear a more in-depth conversation, where we talk about things like how he's turned $50,000 into $200,000 in 3 days, how he's grown $5,000 into $100,000 multiple times, and I've been following him for a while. He doesn't make public calls very often, but I don't know, man. It seems like when he does, it's got a high success rate. So here's his advice.
What I find, especially with people that ask me questions and ask for help, is that too many people are getting in too early without enough knowledge. Because when you look at trading, you think of a get-rich-quick scheme, which it can be. But as we discussed earlier, you usually end up losing all the money that you gain because you just get more aggressive. But yeah, I would say people are getting in too quick without learning the fundamentals, learning stuff. Learning how to manage their own positions. I mean, I see people, they just keep asking, like, when do I get out? When do I get out? Not knowing how to manage their own positions. And that's just for options. I think equity is a whole nother monster, but I think just educate yourself. Paper trade is iffy because, that's not real money. The psychology of it, like we said, is the biggest thing. And then just slowly scale into it, see how you do with it. Don't quit just because you lose money. I think losing money is the biggest teacher, as we discussed. And yeah, just surround yourself by other good traders like I have. I wouldn't be half the trader I am today without consulting and bouncing ideas off other people. Yeah, man, that's really just a few bits and pieces of advice I give.
Next up, we've got Mark Minervini. Mark is someone with a huge track record in trading. He was featured in the famous Stock Market Wizard book by Jack Schwager. He's also the author of bestsellers like Trade Like a Stock Market Wizard and Think and Trade Like a Champion. And he's an expert that's often brought on to shows on CNBC for his input on financial markets. Here's his advice.
Records are meant to be broken, and there's a record breaker inside of you. And you should believe it, because anything that someone else has done, you can do even more, because you now stand on their shoulders, and you can learn and improve on what has come before you. Remember, the trailblazers and the role models are there to show you what you are indeed capable of, and much more.
Next up, we've got the Nomad trader. He's becoming famous lately for the rapid flow, where he basically tries to identify options that are getting a lot of flow in that moment to jump in for quick trades and take 10% gains. And he's been documenting every trade and every exit on Twitter. And I think he turned a $10,000 account into $250,000 in like 3 months, and it's still going. So here's his advice.
Number one is accountability. You have to be accountable to somebody. So that's number one, is accountability, that someone somewhere is holding me accountable. In this case, it's my Twitter account. So the fact that I put everything on there, I know that I have to post these things. And a lot of times I don't want to just splash around, which leads me to number two, which is over trading. Over trading is freaking one of the biggest killers of accounts. And it's funny, now that I post all my trades on Twitter, all entries, all exits, I've noticed a lot of times on the days when I think I'm going to do really, really well, because I've had all these wins, but I've also had some losses. I don't make nearly as much money as like days like yesterday or today, where I had less than 10 trades. And this, I just make a lot. At the end of the day, I have way more money than I started with. On these days when I'm into like the 15, 20 trades, I don't make as much, even if I'm highly successful. It's crazy. But remember, the house always wins. So minimize the house advantage by just playing your high conviction things, which is number 3. To answer your original question, is I try to be as patient as possible. I try to be as disciplined as possible, and I try to go off my main alerts.
Next up, we've got Trading Composure. Trading Composure is an investor with over 17 years experience in the market and a mindfulness teacher. And I personally really love following him and suggest you do as well, because he is one of the few people that talks about the psychology of trading. And in my experience, once you've learned the technicals and the fundamentals, trading is mostly a mental game. So here's his advice.
Well, I would say if you're just starting out, trade super small position sizes. Don't focus on making money yet. Focus on learning. Find out your personality type. That will determine what type of trading you choose to do, whether that's day trading, swing trading, scalping, options, futures, whatever. Figure out your personality and natural inclinations and seek to leverage your strengths. And learn to handle yourself as well. This is a big part of trading. It's the mental, the psychological aspect of it. And I would say try to view the whole process of learning how to trade, perhaps not as a chore, but as a challenge, something you want to take on, something you want to learn to do right. Okay? It's like when you go to the gym. If you've never set foot in a gym before, you don't immediately start bench pressing for 45 pounds plate on each side of the bar. No. Well, if you do that, you're bound to hurt yourself. Instead, what you do is that you start small, and slowly over the days, weeks, and months, you monitor your progress and add more weight, slowly but surely. So yeah, that's how it's done. Basically, when you lift weights, you can't skip steps. Your body will not allow you to do so. But in trading, you can, and that's what gets people into trouble. They trade big sizes right from the get-go. They make trading this emotional roller coaster, which in turn generates and reinforces this negative feedback. I hope this helps.
And now, a quick message from our sponsors. If you are a trader or interested in trading, I strongly recommend you check out the Financial Cloud. I've personally spent a lot of time in the last couple of years learning trading, following different people, and joining different groups. But as soon as I joined the Financial Cloud, I was blown away and immediately knew this was the best resource out there. It was like finding a diamond in the rough, especially in the world of trading where there's a lot of charlatans out there. I'm such a fan that this is actually the only ad where I personally reached out and requested that they let me promote them. So that should say something. I attribute a lot of my own success in trading to the Financial Cloud, and I love the team there, so I'm more than happy to help spread the word. I've also got several of my family and friends to join. My favorite feature is the live chat. So for literally the entire market day, I'm listening to professional traders calling out plays and describing what they're seeing. There are also algorithms they've built that notice unusual activity and instantly call them out to alert you. And I'll admit I was skeptical about bots at first until I saw how effective they were. So believe it or not, these plays are now the core of my trading. And of course, there's also the Discord group with a huge active community, nonstop education and classes offered as well. Quite honestly, they do not charge enough for all the value they provide. Sign up via the link in the show notes to get a 7-day free trial and 50% off your first month. Or you can just use promo code RICH, R-I-C-H. And within that time period, you'll know if it's worth it. In my experience, it's been a total no-brainer. All right, let's get back to the show. Next up, we've got Cameron Newell. Cameron was featured in episode 8 of this podcast, which, by the way, is the most downloaded episode of the entire podcast. And he's most known for being a Domino's pizza delivery driver that turned $1,000 into $5 million day trading stocks in less than a year. I think now he's up to 10 million plus. It was 5 million at the time I interviewed him. And it sounds so unbelievable that Business Insider actually interviewed him and verified his earnings with an auditor. So it's a crazy story. And what I mostly appreciate about Cam, and why I think the episode's done so well, is that he doesn't put himself on a pedestal. He makes it a point to everybody that, hey, if I can do it, you can too. Here's his advice.
As a new trader, generally, when my back was against the wall, when I lost about half my net worth when I first started, I kind of realized I would take entries that basically, if I wasn't green right off my entry, then it wasn't a good enough entry and I stopped out. So generally, one of the biggest things that helped me when I had lost about half my net worth is I would try and take trades with very, very low risk, work really, really hard on my entries. That way, if I went into the red, I knew that my entry wasn't good enough. That one little thing for me changed my career forever. Another thing for new traders is, making sure, you're putting in the time, you're studying, you're every day, whether it be 30 minutes or an hour or 2 hours a day or whatever you have you, for me, it was more like 10 to 12 hours a day in the very beginning. You get in what you put out, what you get what you put forth, right? And so, you can't just expect to be this great trader if you don't put the time and study. And people ask me all the time, what do you study? Anything I can get my hands on, anything on YouTube, any really knowledgeable trader that I've seen in the trading industry, I try and learn from. I just never stop trying to soak up knowledge, even to this day, because that knowledge is power in the trading industry. If you are continuously learning and continuously wanting to study and continuously wanting to improve your trading game every single day, one thing that something that stuck with me that someone mentioned was, if you're not chasing perfection in trading, then why are you even trading? And, even though we might never get there, if you're not chasing perfection in trading, then why are you even trading? Because that, if you're just trying to be okay or all right, then, that might just fade, If you're not chasing perfection in trading, then remember, why are you even trading? And that's kind of what I would leave you guys with, is that, other than that, as always, guys, check out nomadtrading.com. It's a free chat room. We also have a very knowledgeable foundational room there. And I look forward to seeing a lot of you guys. Thanks, guys.
Next up, we've got Brian Feroldi. Brian is on a mission to spread financial wellness, and he's got a lot of great content on YouTube and Twitter about money, investing, and self-improvement. I'll link to that in the show notes, as well as his investing checklist. Here's his advice.
Watch the business, not the stock.
All right, since that one was so short, I feel obligated to at least attempt some commentary that I hope will do Brian justice. He has a Twitter thread on this that I'll link to in the show notes. But I think why, this has become one of his mantras, to follow the business, not the stock, is because he sees that stocks are volatile. Like, it goes up and down every day. Sometimes there are wild swings. The market sells off, the market pumps. But the underlying business is not that volatile, right? The revenue is still growing. The team is still growing. They're still doing what they do. And I think he boils it down to the fact that stock and business is 0% correlated in the short term, but 100% correlated in the long term. Next up, we've got Simon Lerner, the CEO and founder of Netcon Trading. Simon is a successful trader that I interviewed in the episode right before this one. Interesting young guy that's done very well, and he's open and honest about how he had to blow numerous accounts to get there. And he spends a lot of time now teaching people and explaining the lessons he learned so you don't have to go through the same pain. Here's his advice.
A lot of people think that with trading, it's just all about the charts or the screens or buying and selling or just clicking the two buttons, but it goes so much deeper than that, right? Clicking the buttons, buy and sell, is probably 2% of the entire equation, right? And for you to have great consistency in trading, I feel like you need to have consistency in your other aspects of life, because your personal life and trading or business go hand in hand, right? If you don't have consistency in your personal life, you will never have consistency that you want to have in trading. And I promise you, it's so much easier to wake up and go to sleep at the same time consistently and eat well consistently and meditate consistently than it is to trade consistently well, right? And how you do one thing is how you do everything. And if you can't do the small things correctly, or consistently, you will never be able to do the big things. So I'll I'll say this in an anecdotal reply as well. I think of money the same as I think of cats, and I think of women. Right? If you chase it, it runs away, right? If you sit there patiently, it's going to come to you and it's going to ask for attention, right? It's just like a cat. You sit there, you chase it, it's going to run around and just run away from you. You're going to sit there patiently on the couch reading a book. It's going to come asking for attention. The same thing with money. The first 16 months or so of my trading, my only objective was I need to recoup my losses. I need to, make money in trading. I need to prove this to those people and myself. When the mental shift came from I need to make this amount of money to how about, it was like, Simon, last year you spent, losing money, gambling, improperly managing risk. How about the next year you just take to figure out this trading thing? You're not going to care about how much money you make or lose. The only thing that matters for you is the process, right? Of getting better at trading. I don't care if the next year I don't make a single dime or I lose my entire trading account. All I care about is figuring this out and learning how to trade. All right. And the same thing, like till today, I don't care how much I make a day or a week. I don't attach myself to the monetary aspect. I never have a daily or weekly or monthly goals or targets for how much money to make. I'll talk about what's realistic, what's unrealistic, but I don't think that anybody should have a daily or monthly, target of how much money they need to make, because you're focusing on the outcome rather than the process. You're focusing on, I need to make X amount, otherwise, I'm a failure. I didn't, hit my targets. It's, I'm bad. But sometimes you need to understand that the market is not going to present yourself with opportunities to make that money. And what's going to happen is if you have, let's say, a daily goal of $500, you want to make $500 profit every single day. Some days there's just no opportunities. The markets are choppy, or you're tired, or there's no market direction or no trade setting up that will allow you to make that. But having a subconscious outcome that you're chasing, which is that $500 you're trying to make, will subconsciously make you make certain decisions and trade when you're not supposed to trade to try to hit that outcome. And that's how you burn through accounts. You were chasing an outcome rather than following the process, right?
Next up, we've got Tom Akazi. Tom is the founder and CEO of The Financial Cloud, where he spends a lot of time educating and teaching people how to trade properly, how to manage risk properly. I have an in-depth interview with him coming soon, so subscribe to hear that. But for now, here's his advice.
So when you're starting out, people want to play with real money. They want to feel like they have skin in the game, right? So maybe you start with a small amount, $500, $1,000, but you should also paper trade. You should always paper trade when you're starting out. Until you can be a profitable paper trader, you shouldn't really use real money. Because if you're not profitable with fake money, what makes you think you're going to be profitable with real money, right? But if you feel like you got to learn the hard way, like most people, I would say probably 95% of people, maybe that number is a little high, but most people feel like they got to use real money. And, the cost of education is not much similar than going to college. You might spend $10,000, $20,000, $30,000 before you actually learn how to trade properly. For me, I think my first year I lost $40,000. Like, it was a very expensive life lesson. And that's when, I hit the big win, and then all of a sudden I was super profitable, and, I've been profitable since, but I also took 6 months off, learned, studied, paper traded until I was profitable again, that I felt comfortable coming back. People need to understand, like 10 to 15% annual returns is what Wall Street expects. So if you're making 10 to 15% a day, that is insane. I made a video, it's my number one video I ever made, is compound interest adds up over time. If you're making, we have a lot of guys actually in the group doing what they call 3% a day challenges. So they're like 3% a day added up over a year on a $10,000 account. You could be a millionaire by the end of the year if you're making 3% a day. Like, people don't understand, it doesn't take huge wins. It's consistency that's going to make you money.
Next, we have Gigamute, who has had some major wins in the last couple years. I have an interview with him coming soon, so I will use this opportunity to tease that interview with this clip. Here's his advice.
There's this idea that you're going to become a millionaire quickly, and that, you see stuff on Twitter where someone turned $5,000 into $1 million. And that's, honestly, that's amazing. but that's really, really hard to match and to replicate, right? And that's where it goes back to, we talked about some of my big wins where they're over 200,000, and it's like, that's phenomenal, that's great. Well, then I also had some big losses, and the idea that you can just get the steady, consistent gains above and beyond what you would normally get investing, compounds, and you win, right? You're 25, let's say, and you're beginning to trade. Don't expect to be a millionaire by 30. Not saying it can't happen, and not saying that can't be a goal, but you've got a lot of time ahead of you, right? And so be smart, be consistent, and that compounds over time, and then you win. I mean, those are true principles of just putting money to work.
Next, we have the Black Mamba, who actually immigrated to this country and is predominantly a swing trader because he has to balance it with a very demanding and successful career. I also have an interview with him coming up soon, and I will use this opportunity to tease that with this clip. Here's his advice.
Have your goals. Write down your trading style, what works for you, right? Once you are in a trade, have your stop losses, have your profit-taking targets. Once you have reached those, get out of the trade. If you don't know what to do, if it is good enough to take a screenshot and put it in a Twitter or put it in somewhere, it's good enough to take your profits and run away with it. So learn, grow your skills. Whichever field you will go, you have to grow it. Get out of your comfort zone, learn your skill, put in the effort, and let the money come to you, and it will.
Next up, we've got Thomas Watts, a co-founder of the Financial Cloud. Thomas is someone I featured in episode 7, where we went into his story from overcoming cancer at a young age to now succeeding in trading. I would say Thomas is definitely more of a specialist in the macroeconomics. And even to this day, I still stay in touch with him and ping him to get his thoughts on general market conditions. Here's his advice.
I think the biggest thing is know what you're investing in. So people that just pull up a company, look at their financials for 5 or 6 minutes and say, oh, okay, it looks like they're making money, and then they go invest. That's the wrong way to go about it. That's not the way to do it. You could find a company that's losing money, but you have a very high confidence in because you've been to their stores, right? So the biggest thing I tell people to begin investing with is think of companies you shop with. Think of, if you're a big, NBA fan, look at Nike, look at Under Armour, look at Foot Locker. I mean, look at stocks that you understand. Starbucks, McDonald's. They may not be the highest growth or the prettiest stocks, but there's something that can get you to a different point and level in your understanding of investing and trading, and allows you to see, okay, if I walk into Starbucks and I see it's bumping, and I go to another Starbucks and I see it's bumping as well, and there's a ton of people in it, well, then it's one of those things like, okay, Starbucks must be doing pretty well. Well, then they go read up on Starbucks. Why are they doing well? What type of season is it? And then they read up, right? You doing your due diligence is the biggest thing. Now, if you don't want to deal with that, just buy the S&P 500. Don't deal with it. But if you're like me and you like to pick and choose, and you're like, okay, I don't want to lose out on some returns because I think I can pick better stocks. Well, you can do that. But majority of my holdings and just my personal preference in my 401k and Roth IRA and other investment accounts, I'm just indexing. I am. I mean, I'm not discrediting that. I think indexing is great. I don't have to pick and choose winners. But then there's this other side of me that says, I would love to try and pick the next Tesla, which I said everybody's moving towards. That's what the market's going towards. You just have to be very careful in the way you do it. So some advice would be, don't stress yourself out, number one. Number two, don't try and overload yourself with 12 or 13 different companies. Pick 3 good companies that you can go in. You can tell me in 5 seconds what they do, who they sell to, and what they sell. Where are they making their money? Where do they make most of the revenue from? Is it United States? Is it a multinational corporation? What is it? So just understanding your investments is probably my biggest point of emphasis.
And finally, I thought I'd throw in my own personal advice, things that I learned from trading. And I think I'd boil it down to 2 major things. Number 1, take the profits. I can't tell you how frustrating it is because I think literally almost every trade I've ever taken, probably over 90% of them for sure, were in profit at some point. The problem is the psychology where you think you're going to make more, so you keep holding it, and a positive trade goes negative. So either make sure you have stop limit orders set in so you can't let a good trade go bad, or just take the profits. One of the most popular TikTok clips I ever made, which I'll link to in the show notes, went viral on TikTok, was talking about the power of compounding, how those small 5-10% gains stacked over time add up to a lot. So in one extreme example, you could turn $1,000 into $1 million with 100 trades of just getting 10% each, right? So stacking those compound gains adds up to a lot. The other end of that is minimizing losses. So I've got a chart in front of me that I look at while trading that shows you the impact of larger losses. And I'll link a picture to this in the show notes where, for example, if you have a 10% loss, it only takes 11.1% gain to offset that. But if you have a 20% loss, you need a 25% gain to offset that. If you have a 40% loss, you need a 66% gain to offset that. And you get the point. As the loss gets bigger and bigger, the gain that you need to offset that percentage-wise also gets bigger and bigger. And, just the general principles of risk management, I really truly believe that anybody can learn to trade. It's not that complicated to learn the patterns and the fundamentals and technicals. It really comes down to developing your own system that works for you, right? And sticking to it. And it's ultimately a psychology and mental game, not really as much an intelligence game. All right, so what did you think of this episode? It's a bit different than my past ones, but I thought it'd be pretty cool to try it out. Let me know what you thought. I am at Mr. Humet, at MRHUMET on Twitter. Please feel free to reach out. Obviously, I'll link to that in the show notes as well. And once again, I've got several interviews with traders coming up, so make sure to subscribe so you don't miss out on those. In the meantime, you can scroll through my past episodes and find some great ones too. I also strongly suggest that you check out the Financial Cloud. I'm not a part of their team or anything. I'm just a happy member myself. And after trying so many programs and Discord groups, just personally for me, it's my favorite one. I think it's run by genuinely a great group of people, and it's the only one I recommend to my family and friends. There's a link to it in the show notes that gives you a 7-day free trial so you can test it out risk-free and have 50% off your first month. One quick reminder before I let you go to join my email newsletter. It's going to be like a personal note for me to my friends of all the cool things I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free, and if you don't like it, you can always opt out at any time. The link to join is in the show notes, and I hope to see you on the list. And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberish.com. Until next time.